Audit planning is a fundamental stage of the audit process that establishes the foundation for an efficient, effective, and risk-focused engagement. ISA 300 Planning an audit of financial statements requires auditors to develop an overall audit strategy and a detailed audit plan that ensure the audit is conducted in accordance with international standards on auditing while obtaining sufficient appropriate audit evidence. Planning is not a one-time activity but a continuous process that begins with engagement acceptance and continues throughout the audit as new information and risks emerge. Proper planning enables auditors to focus attention on significant areas of risk, allocate resources efficiently, coordinate the work of engagement team members and experts, and complete the audit within reporting deadlines while maintaining audit quality and professional skepticism. The need for audit planning arises from the complexity of modern business operations, increasing regulatory requirements, and the necessity to provide reasonable assurance that financial statements are free from material misstatement. Without systematic planning, auditors may overlook significant risks, perform unnecessary procedures, duplicate work, or fail to obtain sufficient appropriate audit evidence. Effective planning reduces audit risk by ensuring that audit procedures are responsive to assessed risks and that engagement resources are directed toward areas of greatest significance. It also facilitates effective supervision and review of audit work, enhances communication within the audit team, and supports compliance with ethical requirements and quality management procedures. Consequently, audit planning contributes significantly to both audit effectiveness and operational efficiency. Well-designed planning procedures provide numerous benefits throughout the audit engagement. They enable auditors to obtain a comprehensive understanding of the entity, its industry, internal control environment, and financial reporting processes before substantive testing begins. Planning assists in identifying significant business risks, establishing materiality thresholds, determining reliance on internal controls, scheduling audit procedures, coordinating specialist involvement, and identifying areas requiring professional judgment or enhanced professional skepticism. Furthermore, effective planning improves cost efficiency by minimizing duplication of work and allowing audit procedures to be performed at the most appropriate time. For multinational or complex organizations, planning also supports coordination between component auditors and facilitates communication with management and those charged with governance regarding audit scope and timing. The overall audit strategy establishes the broad direction and scope of the audit engagement and provides the framework for developing the detailed audit plan. The strategy identifies the characteristics of the engagement that define its scope, including the applicable financial reporting framework, reporting objectives, industry characteristics, significant business risks, materiality considerations, and expected use of experts or specialists. It also addresses the allocation of engagement resources, staffing requirements, timing of audit procedures, coordination with internal auditors where appropriate, and significant decisions regarding audit approach. The overall audit strategy therefore provides the high-level roadmap guiding the entire audit engagement while ensuring that resources are directed toward areas of greatest audit risk. The audit plan translates the overall audit strategy into detailed audit procedures to be performed throughout the engagement. It includes planned risk assessment procedures, tests of controls where reliance on internal controls is intended, substantive procedures addressing assessed risks of material misstatement, analytical procedures, sampling approaches, documentation requirements, review procedures, and communication arrangements. The audit plan also identifies the nature, timing, and extent of audit work required for individual financial statement assertions and significant account balances. Because audit planning is dynamic, the audit plan should be revised whenever new information, unexpected findings, or changes in assessed risks require modification of planned procedures. Continuous updating ensures that audit work remains responsive to evolving circumstances throughout the engagement. Although closely related, the overall audit strategy and the audit plan serve different purposes within the planning process. The overall audit strategy establishes the broad objectives, direction, and allocation of resources for the engagement, while the audit plan specifies the detailed procedures necessary to implement that strategy. The strategy answers questions concerning what the audit seeks to achieve and where resources should be concentrated, whereas the audit plan explains how, when, and by whom audit procedures will be performed. The relationship between these two documents is therefore complementary and iterative, with changes in risk assessment or business circumstances requiring corresponding revisions to both the overall strategy and the detailed audit plan. Together, they ensure that the audit is conducted systematically and in accordance with international standards on auditing. Comprehensive audit documentation supports effective planning and demonstrates compliance with professional standards. Working papers should record the auditor's understanding of the entity, identified risks, materiality assessments, planning discussions, audit strategy, audit plan, and significant professional judgments made throughout the engagement. Proper documentation facilitates supervision, quality review, and future audits while providing evidence that the audit has been conducted in accordance with ISAs and legal requirements. It also supports accountability by enabling experienced auditors with no previous involvement in the engagement to understand the work performed and the basis for conclusions reached. Audit engagements are commonly divided into interim audit and final audit stages to improve efficiency and reduce time pressure at year-end. The interim audit is performed before the reporting date and focuses primarily on obtaining an understanding of the business, evaluating internal controls, performing risk assessment procedures, testing transactions occurring during the year, and identifying significant audit issues requiring early attention. Early testing allows deficiencies in controls or accounting systems to be identified and communicated promptly, enabling corrective action before year-end where possible. The final audit takes place after the reporting period and concentrates on year-end balances, financial statement disclosures, subsequent events, going concern assessments, management representations, and completion procedures leading to the auditor's report. By combining interim and final audit work within a structured planning framework, auditors improve audit efficiency, enhance audit quality, and ensure that sufficient appropriate evidence is obtained to support an independent audit opinion.